Hey guys, Uncle Ray. Welcome to another episode of the Crypto Bellwether. On this channel, we cut through the hype and the noise, and we give you the non-biased information you can use to make informed decisions. You know, guys, I get a lot of hate in the comment section when I start talking about banking tokens, and I challenge people's thought process. And I find it funny that a lot of times I hear people tell me that I need to do more research. Well, the reason I find that funny is I've done my research across the board. See, I don't just do research of what, say, Ripple has in store for banking, or what XLM is trying to do, or what the Bitcoin ecosystem is trying to do with the Lightning Network. I study everything that that is actually involved in banking. So I've also studied the roadmaps and the game plans of the legacy banks and of SWIFT and MoneyGram and of FEDNOW. And that's the information I'm going to share with you guys because, quite frankly, guys, I know that the haters in the comment sections haven't done any research outside of their favorite project, because if they did, we would agree way more than we disagree. So I decided I'm going to share a lot of that research with you. So we're going to talk about the game plan of SWIFT and the legacy banks to not get disrupted. And they are implementing that game plan as we speak. And I'm here to tell you, the so-called banking reset is going to look a lot different than you think. And not only are the banks not going to get disrupted, they are going to gain more dominance in the flow of money and with payments. And I'm also here to tell you, which I'm going to back all this up with a lot of information and facts, that the banks are coming for crypto, and they're looking to dominate crypto. And we'll talk a little bit more about that in this video. So stay with me, guys, because this is going to be a wealth of information. It's backed up with facts. And at the end of this video, I'm going to take a look at ChainLink's chart to see if we should start stacking. Now, why did I say ChainLink? Because, guys, I truly believe that ChainLink has proved itself to be the number one banking token, and I don't even think it's debatable. And again, I'm going to back that up with a lot of information and a lot of facts. And hey, make your own conclusion, because we hear every day about what's going to happen or what people think are going to happen. But guys, I'm going to talk to you about what is happening in this video and how we're going to capitalize on the biggest opportunity in history. That's my game plan. That being said, hit that like button and let's get started. All right, guys, as you see on the screen, it says banks can 10x blockchain industry, says ChainLink co-founder. Well, how are they going to do that? Well, let's find out. Listen to this, guys. This is one of the ChainLink developers.
It's not called ChainLink by accident. Basically, that's the first property that I think this will create for banks, is the ability to easily connect to hundreds of chains through one integration while still using their existing infrastructure, such as SWIFT messages, to conduct transactions on hundreds of chains. So that in and of itself should accelerate the adoption of blockchain.
Okay, guys, basically what he's alluding to is that through ChainLink's new CCIP, that it's going to allow the banks, the legacy banks and SWIFT, to keep using their systems that they have in place now. But the SWIFT system is not the old system. And what's going to happen, guys, they're going to start using what they call atomic settlement, which we're going to talk about how that works. See, a lot of guys keep hearing when they listen to other influencers, they keep hearing that that's old tech. SWIFT has old tech. It's slow. It takes forever. Well, guys, they are implementing an entirely new system. And ChainLink is going to allow SWIFT to get on the same page with like FEDNOW. And that is going to be a game changer. And I'm going to go through roughly what they're trying to put together. And the future of payments and banking and the flow of money is nothing like what we have thought about, or at least for me. I know my understanding is totally different than a year ago and even a couple of months ago, because these roadmaps are starting to be implemented, and their plans are, we can find out about. And when you totally break it down non-biased, we're looking at everything all wrong. Technology is changing how we are going to bank. No one's talking about that. We keep thinking we're going to do the same type stuff. And that's kind of what we're going to talk about in this video when we talk about atomic settlement. See, right now, when we think about, say, cross-border payments, everyone keeps talking about, well, the banks are slow. It takes 2 or 3 days. Well, banks already have cross-border payments that are instant settlement. So that's not even an issue anymore to be fixed. Now, the biggest issue in, say, cross-border payments and everything to do with the flow of money is how to integrate all the thousands of ways you can send money. Think about it, guys. I don't understand how Venmo or Cash App work or PayPal, but I know that they don't use blockchain, but they are going to start offering crypto, and they're going to be moving money and crypto through their apps, right? Well, they may be using blockchain, they may be using hash graph to and from. The point of it is the thousands of ways to move money has to have a way to be interoperable. And that's what the banks are trying to accomplish. And they're doing it through ChainLink. ChainLink is on the cutting edge of making all that happen. They are way out front. And atomic settlement, and this is one thing I want people to understand, because the tokens in the future may or may not be needed. You may choose to use a blockchain that runs on certain rails and you have to buy that token, but there's going to be 1,000 different options, and there's going to be probably way more options to not have to buy and hold a certain token to do a cross-border payment. That's not the future. I don't know exactly how the technology is going to pan out, but I do know this. You will have unlimited options to make cross-border payments, for instance, without having to own any token, just like you can do with sending, say, Venmo or Cash App right now. And that is going to be doing, Venmo, I promise you, in the future, is going to make cross-border payments from country to country. That's just one example. Now, what are they going to be using? Well, here's what ChainLink is up to. It says ChainLink is providing what SWIFT calls Enterprise Account Abstraction Layer. It basically says that they are going to tokenize assets, and it says that the asset tokenization trend is being embraced by banks and financial market infrastructure institutions, and that's how they're going to 10x the crypto community. Guys, the banks understand that the future of, say, cross-border payments are going to need messaging, and they're not necessarily going to use a token. Now, while I'm on the subject, let me just clarify. I own all the banking tokens. They're going to get their share. Well, how is that? Well, let's think about something. You got FEDNOW, you got CBDC'S, you're going to have, you have the repo market, you have like MoneyGram, and you have SWIFT, and you have your banks. Well, all that has to be tied together. So the bank or FedNow how you get to and from will be your choice. There will not be any dominant player for retail in between all those networks. We can send it literally unlimited ways. If you want to buy a token and download it into your app and use those rails, you'll be able to. But there will be unlimited free rails that don't need a token. And people don't understand how SWIFT is changing. Guys, this is new technology. Just like SWIFT upended the old technology, 80 years ago, whenever it was, they're doing the same thing now. They're not getting disrupted. They're using that new technology to update their their programs and update where they're heading in the future. So they already have the customers, just like the banks. The legacy banks already control the flow of money, whether it's cross-border payments or in and out of the repo market. It doesn't matter. FEDNOW, the repo market, the legacy banks, SWIFT, they are not only going to dominate like they do now, they're going to grow their dominance with this new technology. Now, how do I say that with so much certainty? And guys, this is just where we're at today. The technology and the thought process is changing so fast. This may be obsolete very shortly. But what they're trying to implement is everything's going to be tokenized. Everything. If you want to send me $200 for a book, or let's say an online course, you can go down to your bank, or you can do it on an app. There's going to be unlimited ways to do this. But when we're talking about banks, and you say, hey, I need to send $200 to this guy, and I'm going to make a message, right, of what I need in return. I'm going to need a link downloaded before you give him the money. That's going to be a smart contract, an NFT, or a security token. That's what everything is going to turn into. And so then it basically gets combined, the message and the money. And then it goes to a ledger. How it gets to that ledger, that is going to be a lot of different choices. It may need a token, may not need a token. If it's private, it's probably not going to be a token. Well, that's free. So why would I download anyone's app and buy anyone's token when I can do it for free? That's the future. So that ledger will take my download and their money and switch it around. Now, if in that smart contract it says you need to switch yen for dollars, well, that'll happen as well through a international liquidity pool, which is what the legacy banks are trying to set up. I'm not sure if they're going to use the repo market for that, which has billions and billions of dollars, or if they're setting up another one. But I do know, like JP Morgan, Goldman Sachs, IBM, etc., SWIFT, they've all came together to make this stuff happen. So do with that information as you will. Now, what is atomic settlement? That's basically what we were just talking about. You tokenize an asset, whether you tokenize your house and you want to swap it for another house, or you want to swap it for money, or you want to swap your boat for a motorcycle. We can use that in the future. That will be tokenized into a smart contract with messaging, right, and money looped together into a smart contract, NFT, and into a token. And the ledgers can make all that happen. Well, guys, whether we like it or not, most people are not wanting to do that decentralized. Let's think about it, guys. Let's just say you tokenized your motorcycle and I tokenized my boat, and we agreed to do a swap deed to deed. Well, there's going to be the technology to allow us to do that. But what happens if I send you my title and you send me yours, but one of us don't get it and it's lost? Who are you going to call? We want a third party, guys. Most people do not want to be in a decentralized world. They want to be able to go down to their bank and they want to be able to buy crypto. They want to be able to send crypto. They want to be, if the future is tokenization and they tokenize their house or they tokenize their car, and they're going to send it to someone, they want someone liable for that. They want it to be insured and they want to be able to talk to a human. And even if we do it ourselves, right, through your bank, who do we call if it doesn't go through or if it gets lost? Who insures our money, our tokens? That's what the future is going to look like, guys. Now, Asia is already in front of America. Check out this article. It says the future of cross-border payments in Asia is atomic. They're already using atomic settlement where they're using ledgers. Tokens are not needed, especially on the private blockchains. For instance, if say you are in Bank of America in America, and then someone is in a different bank somewhere else in the world, they can use private blockchains and a ledger, and there's no token going to be needed. And if there is, it will just be a mechanism like the JP Morgan coin. You don't buy the token, they use it as a mechanism. You just pay for the service. That's the future of what everyone is trying to create right now. Now, check this out, guys, because this is getting really good. This is one of the best articles, and I'll leave a link down below. It is a wealth of information. I highly recommend, if you're serious about learning more about banking and the future of banking, read this article. It's phenomenal. Now it says SWIFT embraces crypto, ChainLink integration, and how it helps with tokenized assets and real world assets. Well, check this out, guys. I'm going to show you the map, right? Which basically shows exactly what I just said. You got bank one want to send something to bank two, whether that is currency and switch it over from Chinese yen to the dollar and send it to someone, or whether that is a tokenized asset, like I said, your car for, say, my money. Is set up like this. They have already tested it with Bank of Mellon and some of the biggest banks in the world, and it's working out great. And what they are trying to accomplish is when everything is tokenized, you'll be able to have the interoperability through ChainLink to send money, send any tokenized asset, pretty much any way, shape, or form that you want through any blockchain, through whether it's public, private, fintech, bank, it doesn't matter, an app, their PayPal, Cash App, your bank, the Ethereum wallet, it doesn't matter. They want it all to be interoperability. That's what the legacy banks are implementing, guys. And they are out front in making that happen. Think about it, guys. When the banking reset really happens, where we can actually see it, it's going to be the banks calling people like me and you and saying, hey, have you ever heard of Bitcoin, of crypto? Do you want to buy Bitcoin? Do you want to buy Ethereum? Do you want to get paid in Bitcoin? That's what the world's going to look like, and it's going to come from your bank. Now, check this out. This is the most fascinating part of this particular article. And I've been saying this and I've been seeing it for over a year now, but I couldn't prove it. Well, they make it very clear. Check this out, guys. The implications of SWIFT, ChainLink integration. Banks welcoming crypto with open arms. Banks are on the cusp of a major transformation. They will soon become custodians of your cryptocurrency, just as they hold your traditional cash today. They will also be able to offer crypto-related services such as lending, borrowing, trading, investing, and staking. This will create more demand and adoption for crypto among mainstream customers. Guys, that's the future. I've known that for a while now because at first I thought it was going to be the decentralized utopia. Then I found out that JP Morgan created MetaMask and sold it off to Consensus, which they still own. I learned about the Ethereum Alliance, and that was a buzzkill. I thought the new technology and the people that created it were going to flip the script on all the power players of the world. Man, I was so wrong. But at least I know that, guys, and now you know it. And guys, don't take my word for it. Please do your own research. Start with this article. Go to JP Morgan's website. Go to Swift's website. Look at their roadmaps. Go to Goldman Sachs. Go to FEDNOW. See what they're trying to do. Right, guys? None of those guys, none of those programs like FedNow or Swift are using blockchain for settlement, right? But they have unlimited rails coming to them. You're going to be able to tie in and out of, say, FedNow through multiple rails. Maybe it's XLM, maybe it's XRP, maybe it's Goldman Sachs rails, maybe it's JP Morgan's rails. You'll be able to pick. It depends on who you're going to use. But you can bet the dominant players of tokenized assets will be the legacy banks like JP Morgan and Goldman Sachs. They are already implementing the institutional money, pushing them into that direction. And guys, for me, I just follow the money. And I know one thing to be true, that the legacy banks, Wall Street, and the governments, primarily the U.S. governments, pick winners and losers. And that's what all this crazy regulation stuff is all about. They are moving everything into their control. I hate that, but here's the good news. I think if you just understand the big picture and you make good decisions based on facts, guys, you can capitalize on the biggest opportunity in history. So even though this is a buzzkill, I'm glad that I haven't stacked my money waiting for one of these so-called disruptive projects to make me unbelievable wealthy, because that wouldn't happen. And there's a lot of people watching this video that think that they've stacked some disruptive technology and that when the banking reset, flip that switch. Well, when you flip the switch, guys, you probably have less money in the bank than you have now because you didn't catch that pump, because that token is not going to change the world like you thought. That's why I do these videos. That being said, let's take a look at ChainLink. Guys, this thing's been well over $50. To me, it reminds me a lot of HBAR. The risk reward is phenomenal. It's about a 10x. HBAR, for instance, is at 5 cents. The all-time high is like 52 cents. Well, ChainLink is about $5 right now, and its all-time high is $52, the same 10x. And both those projects, in my opinion, can absolutely rip way higher than their all-time high. So when I look at ChainLink, guys, it's going down, down, down. So, hey, let it go. This is the 30-day. That's the weekly. And let's see what the 24-hour is doing. Still going down. Nope. Hold on. Yep. Still going down. So right now, we're under $6. We're about $5.60, $5.80. Guys, I'm going to be stacking. If I can get ChainLink at about $5, I'm going to start dollar cost averaging in, because look, we're pretty much at that point at the $5 mark. You're pretty much at the low of this bear cycle. Guys, it doesn't get any better than that. You're actually buying ChainLink right now, if you bought it today, lower than the start of the bull run in 2021, because in 2021, before, when the bull run started, guys, it was trading at about $10, $11. So it ripped from that to $52. I have no doubt it's going to be changing gears when it takes out its all-time high. This is a great project. It's not financial advice, but ChainLink, guys, is the dominant banking token. It's not even close. That being said, let me know what you think in the comment section. Share with like-minded people. Tell me what you think. But guys, I think it's good news, because think about when the average person, like, look, I go to cocktail parties, dog park, it doesn't matter. I tell everyone, look, just buy $10 of Bitcoin and educate yourself. Start there. You can thank me later. I truly believe that the average person is going to end up in crypto. They're going to end up buying Bitcoin or Dogecoin or Shiba or whatever, but they don't want to learn how to open a wallet. They get terrified. I have multiple friends that would buy a full Bitcoin just for the heck of it, but they want me to do it for them. They're like, hey, download the app, do it for me, transfer. I'm like, no. But when their bank calls them and says, hey, you want to buy a Bitcoin? They'll go, sure. And it's insured. They don't have to have a seed phrase. See, we love all that, because we're early and we're different. We want decentralized. We want to control our money. But the average person across the world, guys, they love a safety net. But think about the adoption. That's when you know to probably start taking profits, when the average person can go in their bank and buy Bitcoin or different cryptos. Probably time to start taking some profits. Anyway, guys, I know I rambled on, but that was a wealth of information. I find it exciting, and I'm glad that we understand what the big picture of the legacy banks are trying to do. Now, I didn't even get into what JP Morgan announced this week with the, the digital or the deposit tokens. They got a game plan as well, guys. But either way, in my opinion, if you're going to stack any token, look at all the competition. Look at the dominant players right now, and the dominant players in the flow of money is definitely the legacy bank. And JP Morgan, whether we like it or not, is one of not only the most dominant player in banking, they are arguably the most dominant player in all of crypto. JP Morgan, Bank of Mellon, Coinbase, BlackRock, those are your power player guys. Follow the money. All right, guys, that's all I got. Hit that like button. But either way, guys, remember, not financial advice, but come back and be part of this community. Take care.